Well, in the short term, we're up near, you talk about the NASDAQ making new all-time highs. Some of the other indices are up near their previous 2013 highs. We've had an incredibly strong run-up, so I think you're going to see a little bit of profit taking, perhaps some short-term consolidation extend from last week, but I would expect higher prices and new all-time highs pretty much across the board throughout March and April.
Okay. Now, you and I know that it's been a wacky winter, not a wonderland, but it's been a horror in terms of weather, which is skewing all kinds of data. You're actually placing long bets and quite positive on the state of affairs in housing. Lennar, among other home builders, would be on your preference list. Why?
I just think at Schaeffer's, we talk about expectations and sentiment. We like to buy strong trending stocks or sectors that have a lot of negative sentiment surrounding them and have low expectations, because we believe that means there's a lot of sideline money out there that's going to flow into those. There's been a lot of people betting against housing. You talk about the weather, that's been one negative the past few months, but we think that negative sentiment that's surrounding that sector with the recent strength could potentially resolve itself to the upside.
Is there pent-up demand there? We have a viewer who writes in, Patrick writes in saying, hey, there are tons of macro reports out of the U.S. this week, new home sales, pending sales. If some of the numbers miss completely, will we have to attribute it to more than just weakness because of the weather? Could it be because of, the whole taper thing and the prospect of higher adjustable rate mortgages maybe affecting demand? Are we going to have to reassess, Joe?
Well, that's actually definitely going to be the story in the next few months was the weak data during the winter only because of the weather, or is that some sort of actual trend or a slowing in the demand? We actually think, you talk about the expectation that rates are going to rise. That has been sort of the expectation. It was just a given. Well, what's actually happened, the masses believe that, and bond rates actually haven't risen much the past few months. So we just think, again, it lagged early on when that expectations were higher rates is going to hurt home sales. All of a sudden, you see some strength, and perhaps rates aren't going to skyrocket like we perhaps thought, or a lot of the masses thought, and we think that could be a positive upside for that sector.
Okay, gold is a close second on your preference list as well. After a disastrous 2013, some love has been rediscovered for the metal. Do you think it goes on?
I think so, definitely. You talk about gold, it's interesting because back in 2011, 2012, that's all everybody talked about. There was a ton of optimism where everybody said it's an inflation hedge for this quantitative easing, and then all of a sudden people fell out of love with gold, and you saw the performance. It was one of the most hated in 2013. All of a sudden we're back in 2014, strength again, and gold miners specifically. Not only gold, gold miners are outperforming gold by triple in 2014, so I'd expect that momentum to continue.